Hi everyone, welcome back to the channel. My name is Zari and you guys are watching Finance Square. In today's video, we're going to be covering the latest announcement from the US where the Biden administration has announced they're going to be spending $1.9 trillion in regarding to the COVID-19 situation. Now we're going to be reviewing and look at some similarities that we saw back in 2008. We're going to also be talking about the inflation rate, looking at the dollar index, the Bitcoin inflation rate, and understanding how you can actually generate some additional revenue to reduce your inflation rate if you're holding dollars or any other fiat currency, and also some creative way for you to do it if you're not an expert when it comes to cryptocurrency. So let's dig in. So we're going to start straight away by covering this news from the New York Times. So Biden outlined 1.9 trillion spending package to combat the virus and downturn. So this is a very big announcement, guys. So this will also include a $1,400 direct payment to individual to help them obviously deal with the situation. This has affected a lot of industries. A lot of people need to work from home or not able to go to a restaurant or museum or cinema. So this has really affected a lot of people. Now, if you look at what happened in 2020, how much money the government has spent, so based on this website called Data Lab, we can see that so far, from what I can see, they spent in 2020, based on all the number, around $2.59 trillion. That's how much money they spent. You can obviously see here a little bit more about the breakdown. So they say $2.5 trillion in new budgetary resources have been made available for the federal agency to respond to the pandemic. You have actually see the different breakdown, the different phase. Some of it has been allocated for lending. It's actually really give you an understanding where the money was allocated to help with industry and to help the economy stimulate. Now, another thing you should obviously understand that if we're going to look at what happened in 2008, if you look at the numbers, so between 2008 and until 2010, the Fed, roughly the US government, spent $2.1 trillion of treasury bonds and mortgages backed security. So this is it's really nothing. It's peanut to what the government spent in few months last year. Just for you to understand how big this issue is for the US economy and how much they're actually willing to invest to try to get back things to normal. So this is obviously something for you to understand. Now, whenever you look at the dollar index for the past, 20 to 30 years, you can see that before the crisis, I would say 2011, the dollar index was around 119, and then during the crisis, it reached $73. So if you look here before the corona started, so we're looking at almost $100. That was the index of dollars, and obviously throughout the COVID-19, it went further down, and now it's around $90. So again, just to understand that for everything to go back to normal, right now there's a big race in regards to vaccinating the whole population, putting a lot of procedure in place, helping businesses that actually failed during this epidemic. There's a lot of things that will need to happen. It will take a lot of time. It will require a lot of resource investment to bring back to normal. So during 2008, the dollar index was around $73. Now it's around $90. Again, it's probably going to take a year or so for the economy of the US to go back to normal, meaning people can travel, everyone got vaccinated, or I would say maybe around 80% of the population. It didn't take a lot of time. So the thing is, we should probably watch out and understand how far this dollar index will go. In most countries now, the dollar is underperforming their local currency, so which is good for the other currency. Not so good for the dollar, that if you're traveling now out of the US and you're coming in dollars, your dollar is actually buying less. So just to put it in perspective, in 2020 the dollar was devalued by 7% overall. Some countries even more, some countries slightly less. Now I'm going to show you what's the correlation between the dollars and the Bitcoin. And in the last 5 years, if you look here, the dollar lost over 9% of its value. compared to this index, and Bitcoin went up or has increased their value by 839%. Just for you to have some perspective on Bitcoin. Obviously, you can have different value depending when you enter and everything, but you should understand if you're holding Bitcoin, so if you're holding dollars, then obviously for the long run, it's by default any fiat currency will get devaluated with inflation rate. Now, another way for you guys to actually to understand what's happening is, regardless of if you're buying or if you're shorting with leverage, you should always come and understand what is the funding rate. So funding rate will give you an understanding what is the current market sentiment. So if it's in positive, meaning that currently there is more buyers than sellers, and you actually are going to be paying an interest or fee for leveraging your position. Now, if you have a more negative view on the market for some specific coin, you can obviously go to certain platform where you have this green, meaning that currently they are willing, they want to pay for people that actually are willing to short this instrument, meaning they have too many people or they don't have enough people that are willing to short this instrument, so they actually are willing to pay you. So in this case, you actually get paid to short Tron. You're gonna get paid in this platform called OKEx to short EOS and Ethereum Classic as well, for example. In this case, you're actually gonna get paid quite a lot. In IOST and OKEx, you're gonna be paid 0.27. That is a lot of money, guys. Just for you to understand, that is really high amount of money. So this is another way for you guys to actually look and consider at some point, for those that are brave enough to look at generating additional income. That can be also a possibility. Obviously not too high leverage, but this is actually one of the highest rate that I've seen. This is 0.4% on OKX for DEFI. So again, if you have a very short perspective, if you have a very short if you have a short-term mindset or you think the market gonna fall down, this can be obviously a very good way for you guys to make double money by shorting with the right platform and obviously generating this funding rate interest money as well. So now what we'll also review is the following. So this is the crypto lending interest rate for January 2021. Now, let's say right now you generated a very hectic amount of profit in cryptocurrency. You'll ask yourself, you're going on a vacation, you don't have time to trade. Even though you have those apps, you can trade, you're not as sharp, you're not as focused. Following crypto lending interest rates for January 2021 will give you the ability to earn interest, either if you're holding cryptocurrency, if you are holding a stablecoin, and then get rewarded for lending those ones. So here you have different rates. So here, for example, if you're using dydx, you're going to be getting 28%. Just take that in consideration that most of those rate varies day by day or week by week. It might be right at 28%. It might not be 28% in the long run. So also this is something for you to consider. Some of them require you to have a bit more crypto knowledge, understanding how to operate a wallet, and I'll really recommend you guys to consider first to use a small amount of money. I've tried one and it was very complicated. So again, it's try your best to try maybe with a $1 just for you to understand how it works. Try to lock it, try to unlock it, and then see for yourself that you understand how it works. And then once you feel comfortable, you can then obviously try on those platforms. Now, these are some of it are more decentralized platforms, and you have platforms like Nexo or maybe Coinbase that actually have simplified this process. It's very intuitive, very easy to use, where you obviously have to go through the KYC process so they will know who you are, compared to the other one where they don't know who you are, they just have your address and then that's it. Holding it for the long run and you're not looking to trade, or you had enough in trading, this can be obviously a very lucrative way of generating profit for the holders. Now, actually, we would like to cover Nexo because Nexo does provide an additional incentive. Rest assured, I'm not their affiliate. I do not work with them. I have used the services in the past, so I understand how easy it is. So Nexo gives you ability to earn interest in euro, in dollar, and in pound, which is probably one of the only platforms in crypto industry that offer you this option, which is obviously very nice. You can obviously increase your interest return by converting it to Nexo, getting paid with Nexo, which obviously there's a high risk because Nexo it's fluctuating. Right now it's on a bull run, but again, if right now you're entering and from 61 cents gonna go down to 40 cents, so you lost a lot of money. So obviously take that into consideration when you decide to get paid in Nexo token. So this is basically what they're offering you. So they're actually offering a very nice interest rate, which are stable compared to maybe most of those DeFi that depend on supply and demand. So this is something that it's very easy to use. You have to obviously do the KYC process. So basically provide your ID, your proof of address, and then once you're done, this is it. So I think this is for today. If you have any more questions, you're more than welcome to leave a comment and subscribe. Until next time, bye bye.